Okay, here's a quick look at the emini S&P for Wednesday, June the 15th, 2011. At emini Day Trader, we like to examine the market's intraday condition. That is, what phase of the auction cycle is it in on a day-to-day basis, so we can drill down to make our day trades. And the tool, of course, we use is the market profile. So this is today's market profile for the regular trading hours only. And this one over here is the market profile from the overnight session. So going into today, we had several areas of potential support. The first one was up here around 80. And as you can see, overnight it stayed above a bit, but not for long. The next area down was a little bit lower, around 78. Hovered in there for a little bit, but then broke down later in the session here. The next area down that we were looking at was 72. So you can see that in the overnight session it even got below that. So, and then the next area that we had been mentioning lately in regards to support was the one I mentioned yesterday at 65, where the market rallied from in the overnight session going into yesterday's RTH. And that price here was broken about halfway through the trading session today and stayed below it for the rest of the time. So we're going to continue to look at this area around 65 as good resistance. So the potential for the market to move higher into an intraday up was totally erased very early in the day. Here's the regular trading hours market profiles. You can see it was erased very early in the day. Here's where the market opened in the regular trading hours, just below that 72 level I just mentioned. Came down here and hit 65. So the somewhat surprise lower opening like that, I believe, is very bearish, and we're likely to get more follow through. Let's just see how high the market can get. Can it get above 63? Can it get above 65? Then the next level above that would be in the 70 area. So these are some of the prices that I think we should monitor going into tomorrow's session. Here's our trades from today. And we had an early short, a really nice short right off the high of the day. Another couple, 3 shorts in here. Another short here. We did have some long trades that were set up. We had this long trade that was set up right here. We had another long set up here, another long set up here, and this one here, we did not take that. So it was a pretty volatile day. The orange filter here only allowed us to get into this first trade here, although this was the kind of day too that you really kind of had to think through it when the market opened as low as it did. And because it had come down, breached 80, 78, and then 72, we knew that if it could get back up to 78 and start to rally, that would be a bullish thing. But if it stayed below the 78, and in particular below the 72, it would be really quite bearish. And so at that stage of the game, we were not in a position to go ahead and take this trade up here. So we didn't get short and again until here. This trade actually worked out pretty good, hit for both objectives. This one came down here, had a really nice sell-off, and then we had another short in here. I'm sorry, I missed a short. We actually got stopped on this one. This one was very late in the game, if you will. So this is number 1, number 2. We had number 3 here. We were stopped on, and then got short here on number 4. This trade here, and this trade here, and this trade here we did not take. These were longs in a neutral filter after the market had such a strong sell-off, so we stood aside on those. So it was an unusual day in the sense that what developed during the day, it didn't shift our longer-term outlook on the market, which is not it's a swing time frame basis. In other words, for the next few days or to few weeks. So, anywhere from 3 days to 3 weeks kind of thing. But, we're really looking at probably 3 to 5 days usually on our intraday analysis. Because from a day trading standpoint, that's probably the most important. Not that a slightly larger time frame is not. It can also be very useful. So today was somewhat challenging in that sense, although certainly our traders, having thought through that kind of open and its potential ramifications, were ready to go ahead and have have a preference for trading the short side and using our software with our balance areas and paint bars, being able to obtain very nice trade entry location with very reasonable risk. So as long as you can get on the right side of the market in a fairly good place, in other words, good trade entry location, you should do all right. Then it becomes just sort of an emotional thing for the actual management of it. So as far as we're concerned, the trades today were pretty good. When you look at them just from a mechanical standpoint, they were somewhat challenging, but just the same, the market is, I think, continuing to show us that it's pretty weak, and the next levels down really could send the market all the way down, perhaps to the 50 to 45 area. So anyway, that'll be it for today. Thanks for watching, and we'll see you again tomorrow. Any questions or comments, just reach us at info@eminidaytrader.com.